But let's talk about the topic du jour, which is, of course, the big T word of tariffs that's just sort of ravaging the markets.
It's the first crisis that I see where the governments are not working together or not against the crisis. They are the catalyst of the crisis.
Bienvenue dans le scoop. Welcome to The Scoop. I'm your host, Frank Chaparro, Director of Special Projects formerly, and I am here in Paris at Flowdesk headquarters with Guilhem Chaumont.
For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
This is the first time you've been on the show, but a few of your counterparts, colleagues have been on the program. So listeners should be familiar with Flowdesk, but maybe for the unbaptized, what exactly do you do? Where do you sit in the market as a trading firm?
Yeah, thank you very much for having me. What a pleasure to have you in our offices. So we are a full-service digital asset trading firm, which means that basically we come mostly from a market-making background at first, and we kind of coined and got this product that we like to call market making as a service quite popular, where token issuers can essentially provide their own liquidity to their project. So I think this is mostly where we come from, and this is a product that our clients love and they've been using, and now we work with the top counterparties out there and top projects. And then slowly we've evolved into a full-service digital asset trading firm. So right now we basically offer brokerage, OTC services, custody, treasury management, the wide scope of any of what you would expect from any financial services firm, and we do that with a much wider range of counterparties too. Because at first we were mostly working with token issuers, and now we work from the smallest token issuers to the biggest ones. We work with a few banks who have issued their own stable coins. We work with ETF providers, VCs, foundations, high net worth individuals, founders of projects. So we're kind of like trying to cover the full spectrum, both with a pure technological approach, which is what our technology products offer, and a more financial services approach.
Yeah, I think everyone's moving in the direction to be end-to-end and kind of almost work through the whole life cycle of a token project from, the idea sort of coming to fruition to that IPO or the crypto equivalent moment of exchange listings through the trading of it in the secondary market. And we'll get into a lot of sort of that growth and that expansion of the business. But let's talk about the topic du jour, which is, of course, the big T word of tariffs that's just sort of ravaging the markets. I mean, I think I've been waking up quite early here in Paris because my body hasn't adjusted. And at 5 a.m., I'm, it's been different. So I'll wake up and I'll try to go back to sleep. So I'll wake up at 5, check the market, then go back to sleep, wake up at 7, check the market. And it can be radically different within those, 2 hours these past few days. Because there's a lot of uncertainty. And I think that, before we turn on the mics, we were kind of walking through like the sort of undergirding themes of this market dynamic. Obviously, last night we got the news that China was implementing reciprocal tariffs on the United States, which kind of poured a lot of cold water on the rally that we had. Anyway, that all sort of leads to the question of what is the dynamic looking like from the perspective of crypto institutions? They don't want to catch a falling knife. They're not buying, but maybe walk us through what you're seeing.
So, I mean, well, first of all, let's state the obvious. Crypto doesn't live in its old world anymore, assuming it's heavily correlated to the macroeconomics factor, whether that's, the equity environment, the rates environment, et cetera, et cetera. So basically, all eyes on what's happening right now in the world from a crypto perspective, because we simply have no choice. When it comes to the tariff, I mean, I think for me, there are multiple things to say. So first of all, as far as I'm concerned, it's the first crisis that I see where the governments are not working together or not against the crisis. They are the catalyst of the crisis. And we will see what the Fed does, what the central bank does, because probably that's where we will have some easing a little bit that will help. But this is a first reason to be worried. Now, if you look at the fundamentals, I think obviously we all know that tariff, generally speaking, is a negative sum game. It's even negative for everyone. I mean, that's what most people
I mean, that's been
would
the
argue
sort
at
of
least.
prevailing sentiment since the Second World War, right? We don't want the Swiss making pasta and the Italians making Swiss watches.
Yeah, I think it goes back to the simple law of economics that were stated a few centuries ago. But if you are really good at something, you should do 100% of that, and you should sell it to someone who does also something extremely well, and in exchange they give you something. And we would want to do that with as little friction as possible, which is why tariffs are probably a negative sum game. And at this point, I think the problem is everybody is looking at this crisis like any other one, which is arguably 90% probability the good approach. We've seen this 3 times since World War II. There have never been X days in a row with negatives. So everybody's kind of like taking this approach. And I think it can be a right one if this whole thing stops and we recover and we will have and everybody will be like, okay, we've had an incredible buying opportunities. On the other hand, if you do the math, if you look at what an iPhone is going to cost, some food that the US imports, or the other way around, I think there are many reasons to be quite concerned about it. If you look at, Apple, for instance, or Tesla, or any US companies, what we're seeing is potentially their net income will be divided by 2, by 3, by 4, whatever it is. At the same time, we've been obviously trying at very high multiples, high price earning ratios. So you combine this reduction of net income with potential ratios that are more in line with the historical, and then you price that over whatever 4 years, 8 years, 12 years window, you're probably like, oh wow, maybe the stock market should be 80% lower from the all-time high. So I think the next weeks are going to be all eyes on, is this going to stop or is this going to escalate? And as a result, all markets will be correlated. And I think I see a very strong case for crypto seeing its bottom because of what is happening now, and everything is gonna ease a little bit. But at the same time, I mean, if things keeps escalating, maybe this is the triggering of a sooner anticipated bear market for the whole crypto, which we are already living, by the way. If you look at altcoins, for instance, right now, it's a bit complicated. So this is our view. We have all eyes on. We have obviously good faith that humanity will solve this problem and everybody will have very reasonable discussion, but it doesn't seem to happen at the moment.
It seems to be, there's 2 things that you kind of outlined there. First of which being the clarity that institutional investors, large market participants are waiting for is around the escalation and the extent to which rational minds will prevail. And I guess that's one thing, but maybe it's kind of 2 things. One thing that I'm interested in, you mentioned that in this environment, everything's correlated, right? We're all sort of just, everything's one to one. But there are still some idiosyncrasies. I kind of joke about this a lot on Twitter. I'm not as glued to Twitter as I used to be, but it seems like when we have news of escalation, especially over the weekend when there's low liquidity, it's like in anticipation of what's going to be a bad day the next day, crypto draws down, let's call it 7% in the blue chips. If we're talking about, if we're including ETH, then maybe draw down 15%. But let's say, we're anticipating bad news. Then we draw down 5% over the weekend when other markets are closed. And then, I mean, this has happened a few times, but most recently this past weekend, then we get Sunday futures hit, and then we draw down another 2%. Then the market opens down and crypto draws down again. So it's almost like there's this amplification. I don't know if it's tied to the weekend trading or the extent to which maybe because crypto is now in an institutional portfolio, this is the first thing that they might sell to de-risk. Is this a phenomenon in your mind? And what do you think might be?
So there are multiple things to say. So I think you are completely right, highlighting that weekends have been quite active recently, much more than they used to be. My opinion is always the following one, as I've seen multiple cycles in crypto. When we are in the bull run, the market will try to find good reasons to go up, and will mitigate all negative reasons. And so is the other way around. When we are in the bear market, you can have a positive news. You will basically don't move, do +1%. You will have a negative news, and you will be destroyed. So I think the market right now is just trying to find reason to go lower because there is no flow buying in. The money right now just don't want to go into any asset. I would argue risky asset, but right now everything is risky. So I think that's why we're having all these impacts of negative news, and obviously assets which don't rely on pure cash flow fundamentals, Bitcoin, Ethereum. I mean, we could debate about all those are suffering even more because right now there is only liquidity exiting the market. We've seen some positive signs, particularly a few days ago. People had this kind of like counterintuitive signals, or contradictory signals, I would say. People buying large amounts of Bitcoin, of ETH on spot market, and at the same time, other people buying significant downwards protection, deep out of the money puts,
What's the skew?
particularly on ETH. So it's a really tricky exercise right now to assess where this is heading. Volatility is obviously are trading at all-time high, near all-time highs, particularly for short-dated volatility. Obviously, where the VIX is at the moment is quite.
How is crypto mirroring that activity in our derivatives market?
It's the same times 3 to give you an order of magnitude. I think it's pretty much how you should see it, and obviously there is that amplification, particularly on the altcoins, which have less liquidity and which have suffered even more.
That makes sense. You mentioned sort of like looking at the economic impact of tariffs, sort of translating into given how rich stocks are trading at a 70%, 80% drawdown. Crypto, in some instances, have seen. I mean, if you look at across the long tail of assets, a lot of them are. It's surprising how quickly the market turned. Are down 70, 80%. Meme coins are all down like 99%. I reckon Solana is maybe down 50%.
Yes.
Yeah. So we're there. Now the question I think a lot of listeners might be wondering is, do we get another 70% drawdown in store? Because everything's amplified, to your point.
So multiple things to say
Or
here.
did we sort of go through the cycle more quickly? That would be the optimistic.
Assuming we've gone through the full bull cycle already, which was a very short one, I guess. So I think there are multiple things to say. So obviously right now we're heavily correlated to what's happening on the stock markets. But if there is one thing to say, and if there is one thing to be positive about it, is that crypto is fundamentally deeply correlated. If tomorrow the stock markets, all those companies generate much less revenues, this has nothing to do with crypto. And that's where we could see potentially a decorrelation at some point later this year between crypto and the stock market. We've seen a few instances where stock markets were down and crypto was basically not moving. Remember particularly on a Friday recently. So I think with regards to where we are in the market right now, I think it's very important to highlight that this bull run was very different from the previous ones. People have been, talking about institutionals coming into the space for years, if not a decade now. I think it finally happened from the flow that we see, and that's why it explains also why the altcoin market or the alt season have not been as exciting as some would hope, because this is not where the institutionals are going. And that's why it basically went up and went down just in a matter of a few months. So I think, this inflow of liquidity from institutionals is here to stay. When we have the big institutions buying Bitcoin, whether that's through BlackRock's instruments, we have some sovereign funds also in the UAE, getting exposure to those instruments. They're not playing, 1 year, 2 year bull market sort of exposure. Those guys are just buying, and they will likely hold for a very long period. Similarly to for instance, buying gold or whatever. So my point being that irrespective of what is happening these days, and it's going to last 1 week, 4 weeks, 2 months, 3 months, let's even say 6 months, we still have this positive inflow, multi-decade TWAP, essentially, that is basically taking supply off the market. And that's the big difference between versus the previous bull runs, and we are seeing it on our desk. So that's why we don't expect a similar drawdown as we've seen it in the past.
For Bitcoin, though, I feel like
For Bitcoin,
specifically.
yeah. Altcoins, I think it's gonna be very similar. And I think my deep conviction is at this stage we're seeing a significant change in the industry from utility token to something else. And that's something else we can discuss. But I think generally speaking, assets we don't have fundamentals, whatever those fundamentals are, can be, we generate dividends, we're a security token, we're a governance token, and a real one if possible. That has some intrinsic value, and that will lead to some value into some market cap. But other than that, I think now the market has been used to this since 2017. I think the meme coins was kind of the ultimate wave of this and the most assumed one. Okay, now we invest in pure speculative token. Some will say it's a Ponzi scheme. There is no, I'm inventing the Uber or the Airbnb of something and buy my token. It's going to be fantastic. I think the meme coin was kind of like, the apogee of that. And in that sense, personally, I like it. I think it's interesting. At least, we're not fooling anyone, I guess. But I think it's probably the ultimate step where people will be like, well, okay, the casino use case for crypto is a really nice market, $1 trillion market cap or whatever it could be. But yeah, having meme coins with multi-billion-dollar valuation maybe doesn't make sense. And I think all in, that's quite positive because those assets will remain. There will be bull, bear cycles. People will want to speculate around it, but that's probably going to lead to something else. And that we are witnessing at the moment with regards to tokenization.
That makes sense. I wonder, the other interesting element of how if we're calling it a bear market, we switch so quickly that it almost feels like weird to say, but this is a crash for sure in both crypto and equities. But it's not a crash like what we saw in the wake of FTX or during the GFC, where you had like key financial infrastructure breakdown. To your point, right? This is more about almost it's government imposed to an extent, to a large extent. But the sort of like pipes and plumbing of our crypto capital markets aren't the reason behind this, right? You're not seeing I mean listeners will know this because we talk about it a lot. There really isn't a robust credit market like there was 3 years ago.
Yep.
But the point is that issues in the infrastructure aren't behind this drawdown. And the markets are working.
Yeah, could not agree more. Right now we obviously have very little endogenous events in crypto, which leads to a potential collapse, just like you said. Those that we see, let's say for instance, the Bybit hack, are almost non-events, arguably, and are very isolated. So that's why again it goes back to everything will be exogenous now and will be heavily correlated to the market because crypto is going to converge with TradFi. So if you picture the world of crypto tomorrow, it's a 20, 30 trillion market cap, type of asset class, but 80% of it is just security token. Whether this is Coinbase being tokenized, the Tesla, or some small SMEs or some early stage startup, some money market fund, whatever that is in bank. So this is, my deep conviction is that crypto as a pure asset class doesn't really exist. Like the only use case we have is the digital gold use case with Bitcoin. And again, that's probably very similar to gold to some extent, but otherwise it's just a layer to bring existing assets. So, and that's just what we are seeing, we're seeing market caps of stablecoins going up. We're seeing those tokenized money market funds or even corporate bonds ETFs coming in. So that's very interesting. And I think this is where crypto is heading. And I think also talking about price, obviously it's not like Bitcoin, for instance, did a 200, 300% bull run versus previous all-time high. I think we haven't gone really far. And again, explained by a wide number of components. Now this is becoming a big asset class. Like this is big market cap. So to move this, you need a lot of money. And so that's true on the upside and that's true on the downside too. So that's why we are probably, crypto tends to do the most ironic thing often. So everybody was expecting, 2025 to be an excellent year, similar to 2017, highly correlated, to Bitcoin's halving. Again, this is almost non-relevant at this stage. If you look at the impact on the flow, just dividing the new supply of Bitcoin is very little. So my point being is to try to see the light at the end of the tunnel of the current crisis that we have is obviously we need to be optimistic about the situation of the world. We need to look very closely at what central banks will do. So now we are talking about, 130 basis point cut this year in the US. We're also expecting some very decent, almost 100 points cut down to 1.5 in the EU. So, and that's going to be done over the course of the next 12 months. So it will be very ironic at the end of the day that all of this fuels probably, another bull run for equities. But again, to crypto, and that's further down the road in 12, 18 months, whenever that is.
Well, that goes into the whole, thesis that this is part of Trump's grand plan to push the Fed into the direction that he wants, which could be a topic for another day. I'm curious because we're not political pundits, although we can pretend to be on TV if we want. So you talked about this shift that's sort of happening, or this convergence rather, that you see happening in the future. What does that translate into, or how does that manifest into the way in which you operate the business? We started the show talking about sort of this build out in terms of the servicing the token life cycle, as it were. But how does it then also include working with players in traditional capital markets to basically bring global assets on chain?
Yep. So there are multiple things to say. So it's something we kind of talked at the beginning is right now, if you want to run a crypto financial services firm, you have to do everything, everywhere, all at once. Sounds easy to say, but the entry barrier is getting much higher every month. Whether that's, regulation, you need to be licensed everywhere. The assets that we are trading now, it's not utility token anymore. It's a wider range of assets. Balance sheet is a very important game because, so my point is the era of small boutique shop is probably going to be over in the next 4 years. That will lead to a lot of consolidation in the market.
So I need to start my competitive crypto OTC desk now.
Yeah, probably now is probably the good time, or maybe the last time you can do it in an ambitious manner, but let's say like low scale at first, and then you go big. Like like if you look at new incumbents in 4 years, this would be big banks, big existing decks that will pour like thousands, hundreds of millions day one into this activity, or it will not work. And obviously, even if we live in a world of AI, human capital will be very important. You cannot operate a financial services or serious financial services firm in crypto today without being 50 or 100 people. You think about operation, compliance, on-chain monitoring, the onboarding, like everything is extremely complex. So for us, obviously, that's why we've been through this route of, being very ambitious. It's only been 4 years, almost 5 years we're in this journey. And that's why we raised a lot of capital to do that. That's why we keep building heads down. We think it's going to take 10, 15 years, honestly, to build a big firm. So we felt like we just got started. But obviously, when we see this, it's all about the timing. 4 years ago, there was a lot of firm starting, prime brokerage, like for institutionals are coming to the space. 90% of those firms died because the flow wasn't there. So today, and we've seen it since even 2018, firms working on tokenization, securitization, they will collapse. What is the good thing to do now? So our approach is, we know tokenization is going to happen. Now we think it's happening now, and we think it's going to happen in the next 2-3 years to a relatively large scale. We could talk about the other magnitudes. We've been basically working toward that since day one because we think we will trade those security tokens exactly the same way we trade those utility tokens. Those are going to be ERC20 on any other chains, traded on multiple exchanges. I mean, my point is they're going to be traded in a very different way than traditional assets, which are usually on a single venue against obviously a fiat currency. No, it's going to be heavily fragmented. It's going to be traded on dozens of exchanges against dozens of currencies. Some of them are going to be traded on DEXs. Some of them are going to be traded RFQ on chain. Like you see, the landscape is going to evolve. But my point is, we will trade those assets exactly the same way we trade those utility tokens today. That's very important to understand. I think that explains why we've invested so much in what we've invested. Of course, trading those assets would be permissioned, because not everybody, without having the right KYC, can trade a security token. But I think this is when we will see the true potential of crypto, where I do agree with you. We've got everything ready. We've got 90% of the tech ready in terms of scalability. I mean, we've got everything ready. So I think right now it's just about, the intention and having those new incumbents entering the space. And the barriers are not what we think they are. It's not about technology. It's not that they don't want to do it. It's we are going back to the good old rule of finance. It's about RWAs, but risk-weighted assets. You have crypto on your balance sheet. It's a pain in the ass for those guys. So now this is probably the last piece of the puzzle that we need to crack. is how those guys can enter the space seamlessly in terms of working of capital requirements and all of that. But I think
That's the biggest issue, I think, right? For Goldman Sachs or something to get involved in crypto, it's the collateral issue, and then also, but before the Trump administration, the fear of regulatory reprisal.
now that regulatory risk is kind of like winding down, and it's not open bar, but I mean it's at least providing some breathing. I think the capital requirement issue is really the last piece of the puzzle, and it can take 1 year. We've seen some positive insights recently, or it can take much longer. But as soon as those guys will be able to trade those crypto assets, and again, when I say crypto asset, I mean mostly security tokenized assets. I think they should all be in favor of doing that, and we've seen it. You look at the TVL of BlackRock's BUIDL recently; it's going to the roof, and I wouldn't be surprised that the growth of TVL of security token on this one is heavily uncorrelated to the general market sentiment, because that's just people moving assets on chain. And you should want to do that irrespective almost of market conditions if it brings more efficiency.
Makes sense. How do you reckon AI is changing the business? And you mentioned the importance of humans in financial services and that not changing. Can it sort of be used to be more predictive about like where potential counterparties might be, or if you had a certain view for a client, or if a client comes to you or counterparty comes to you with a certain view of a trade they want to make, you can then sort of leverage AI to help you sort out who the best counterparty would be or the best way to structure the trade, et cetera. Is that something that's already happening, or?
Yeah, it's definitely happening. So I see multiple things. So first of all, to state the obvious, and I'm not a big fan of talking too much about AI and crypto convergence, generally speaking, but where AI brings digital abundance, crypto brings digital scarcity. And I think that's something fundamental to understand, and I think that will be a fundamental driver of what will happen in the next years. Then obviously all our business are going to be changed. We could argue that finance is going to be one of the least impacted business by AI. And it's going to take more time than other businesses for a wide number of reasons, but the impact is going to be massive. Kind of like when you bring internet, you could take the business that is the least digital or prone to be digital. Internet will have a big impact. So on our side, it's very simple. We see a way for AI to augment humans. So putting AI everywhere is very important. Today, most of the AI is done obviously through LLMs. So it's where you have words, where you have text. AI can bring a lot of value, but we also see it on the models. And I think the fundamental change, to go back to one of the things you said, is for AI is going to be on the risk side. Better assessing counterparties with a lot of data, every publicly available data is going to be very helpful. And as usual, a financial services firm, what is it? It's a very risk adverse firm. We don't want to take risk. And we are always looking for risk. Where is risk? And if you run a financial services in the good way, you're probably too conservative about what the real risks are, because you don't know what those real risks are. But with AI and with all this data, and again, having a connectivity like the one that we have between all market participants, 150 exchanges, is very important to know what's going on in real time. It's a game changer, because you have a better picture of the reality. So the risks are not changing. Counterparty that is insolvent is insolvent. The risks are not changing. You just have a better assessment of it. And as a result, you have a better view. So what I'm saying in practice is probably, we're talking about credits. You want to borrow from us at a certain LTV because we have a better understanding. You're going to get something better and more efficient. The risks haven't changed.
100%.
It's just the assessment that changes. And I think this will definitely have a massive impact in finance, generally speaking. And from crypto to consumer lending business, like buy now pay later. I mean, you have very clear view of who is on the other side of the trade.
Yeah, and once you sort of have more clarity in financial markets, by being able to determine the risk, you'll have more seamless flows of capital, more efficient markets, more efficient pricing.
Yeah.
Cheaper. It just
Leverage,
becomes
essentially leverage, more leverage.
more leverage. Yeah, which is great.
Which is great for those who need it and who want it.
So I guess looking into the next, like, 6 to 12 months, what are you anticipating? What are you most excited for as it pertains to maybe the business and just generally speaking? I feel like RWAs continuing to grow is going to be a huge trend.
So this is the number one trend. The one, we've built this company on this is the thesis we've built this company on. So we are at the forefront of this, and we have talked about it, but basically now we have a few initiatives that are very interesting. Some of them will be public soon. So we are obviously very excited about that. And we are very excited to leverage both our technological, regulatory, human capabilities in that regards. But I mean, there are tons of other narratives we are also excited about. And, I think let's definitely not bury all the utility tokens. We are very excited about what's going on. There were tons of companies that were funded recently that are waiting, for the good moment to hit the market. So obviously right now it's going to kind of hit the pause button on that front with what is going on. But there is a massive number of very well-funded companies that are building across a large range of narratives, and all those things converge. You look at decentralized identity, obviously it's also links to tokenization. There are many interesting initiatives, whether that's on the infrastructure side, still layer 1, layer 2s, dedicated for some specific purposes, a layer dedicated for RWS, for instance, etc. So we look at all that. So for us, we are heads down, building. We've been one of the things we really looked, which is a bit ironic for a trading company, is we look very little at the market. We build what we have to build, what we think bring value to our clients. We try to do it in a transparent, compliant way, maybe less greedy way, not trying to extract too much value, or at least extract a reasonable amount of value for the services that we provide. So we are heads down building. We are obviously, with the recent funding rounds, we are doubling down on our bets, because even in today's market, I feel we've been proven right. I mean, by most of the metrics, our business is improving. So obviously you will have a record month when Trump is elected, or whatever. But by all metrics, our business is doing great. Numbers of counterparties, trading volume relative to the public trading volume that the market is doing. All of those things are telling us that we are pointing towards the right direction. So we're going to keep doubling down on what we do. So we are hiring a lot of people in the next 6 to 12 months. We're building an office in the UAE, and we are trying to keep a decent footprint to be able to grasp market share, because it's in bear market that you grasp market share, like relative market share. My point is, so I think we've been quite good at this in the last bear market, and that's how we emerged as one of the top financial counterparties and market making firm in the space. And we just hope to do exactly the same in the next bear market, whether this is a 6-month bear market fueled by interest rates and we have a surprise next year, or whether this lasts for the next 3 years. We are very well funded for that, and we are quite lucky to have a business that is obviously correlated to crypto, but probably we have the least correlated business, notably through our market making approach and technological approach, which is subscription based, purely technological, and we don't do directional trading, to put it frankly. So that's why for us it's heads down, and yeah, we see the long term. I think the road is going to be very long, much longer than most what people think.
You mentioned the funding round. I think it was 100 and something in total between the two tranches, I guess we could call them. How did that deal sort of come together?
So it comes like any deal, so either you are trying to raise money or you are not. When you're trying to raise money, you talk to a lot of people and you have a lot of opportunities. And when you are not, sometimes you have a good opportunity. And that's the combination of those two things. So we raised the first tranche where we talked to a lot of people. Market was not as good as it was today. And we got very blessed to receive multiple offers. So we took what we thought was the best one. And again, picking the best offer is a very difficult exercise. And then for the second operation, this was done off any roadshow. We had great inquiries from multiple people. That's how we got HV on board. And then working with BlackRock was kind of natural for many reasons. And that's how it all happened basically last year through the course of 2024.
And what do you think you're spending? Where are you allocating most resources?
The short answer is everything. The long answer is we are doubling down on technology, because we feel we have some advantages in certain areas, and we want to keep doubling down, notably exchange connectivities, coverage, management of collateral, rebalancing collateral across all the venues. It's a very important topic in crypto. If you look at trading ops, it's very different from TradFi, arguably much more complex. So you have a huge technological component in that. We are doubling down on our front office team because, again, even if we talk about AI, this is a people business. This is very important. So we are building highly talented, highly concentrated team in all the regions we operate. Now that's four regions, 5 regions soon. And obviously the regulatory side of things. Regulatory compliance is going to cost a lot of money, sometimes for the wrong reasons. If we are optimistic, we should say hopefully for the good reasons. And I think most of it is good, and again, crypto brings an interesting set of new capabilities. If you look at on-chain monitoring, you cannot do that in traditional finance. You cannot see the whole history of the assets you are receiving for the last 8 years. Oh, this was coming from the Bitfinex Act. This was coming from this, from there. I think this is fantastic. So regulatory is a big bet we are making because at the same time, we're talking about tokenization, regulated assets. So we need to be TradFi grade. That's what it implies. And we need to be TradFi grade, not in one region, because this is a global business 24/7. We have clients across the globe, but in all the regions we operate. That's a big investment we are making, and we are quite convinced this is going to pay off. But the one thing with regulatory and compliance that is very different from all the other investments you do is there is something that you cannot buy is time.
Yeah.
It takes years. It takes
To build it.
takes years.
Yeah. Well, this was fantastic. Thanks so much for taking the time.
Thank you very much for having me.
Merci.
Merci beaucoup.